What's up, everybody? Charlie Marlow here. Merry Christmas, Happy Holidays, Happy Hanukkah, Happy Kwanzaa, Happy New Year. Did I cover all the bases there? There we go. All right. Thank you for watching here. And we're going to do some different videos on this channel, different than our sports channel where we're focusing on St. Louis Cardinals and also the Kenny Wallace channel, which is NASCAR related. On this channel, we're going to do some historical videos and also some videos that have to do with real estate, which I am very passionate about and involved in the rental property business. So I want to talk about interest rates because everybody knows that interest rates have been going up all year. And I was talking to somebody the other day about interest rates, and he asked me, well, I said, okay, the interest rate's going up 2 points or 1 point, whatever it is. And he goes, well, what does that mean? And so you're starting to do the math and kind of explain what that means in terms of your mortgage, actually, which I think we all do that. We go, okay, wait, our interest rate went up half a point or a point, but like, what does that actually mean month to month in terms of my mortgage? And so I was thinking about that anyway. And then I got this paper. I'm not going to show it. I'll show the back. I'm going to read you the paper. But I got this this piece of paper, this piece of mail from my mortgage company telling me, hey, your interest rate is going up in 2023, which I knew anyway because this was an adjustable rate mortgage. It was a 5-year ARM on a rental property that I purchased in July of 2018. So I knew all along that this ARM, which I believe the rate was, okay, it was 4.5%. So I knew it was gonna change in 2023. And then of course, in 2022, all the craziness with the Fed continuing to raise interest rates. Now I'm like, okay, this thing's gonna go up a lot. So I thought it'd be interesting to show you guys basically exactly how much the rate increase means for your month-to-month mortgage. Okay, so just some background. So this was a rental property, it still is, that I bought for $90,000 in 2018, okay, in Kirkwood, Missouri. So $90,000, put 20% down, whatever the math is there. So I'm not good at math. So that's what, 18 down. So you start with that money you're having to pay off, which is what, 72-ish thousand dollars, whatever it is. So my current rate, and I'll put the numbers up here for you guys to check this out. So my current rate, which is 4.5%. Okay, so my monthly payment has been right around $481. And so right now, that's $108 in principal each month, about $233, $234 in interest, and about $139 in escrow each month. Of course, that's for your taxes and insurance. So this rate is going up, according to this beautiful letter I got, to 6.5%. It's jumping 2 full points. And this is what happens when you get an adjustable rate mortgage. I knew this was going to be the case. It jumps from 4.5% after 5 years to 6.5%. Now, I will say my goal, and I do think I will accomplish this, is to pay this off, move some money around different properties, pay off or sell a different property, and pay this off because I don't like the fact that this rate has jumped to 6.5%. But I think it's interesting to show you guys, again, what that means. So now, with the 6.5% rate, all right, my payment has jumped about $63 per month. It went from about $481 per month to $544 per month. Again, that will start August 1st of 2023. So the payment jumps about $63, but it's actually worse than that because when you see the principal, remember I told you I was getting $108 paid down each month. Well, now my principal is about $82 paid down. And there's where the interest rate hurts you. That's one of a couple ways. But now I'm building less equity because about $26 per month to start here, less is going to actually pay off the property. So look at the interest payment here. There's the really big difference. My interest payment, which was about $234 per month, that thing jumped essentially $100 to $333 per month. So I'm paying $100 more in interest. And remember, I'm paying $26 less in terms of I'm getting $26 less paid down in terms of building equity than I was before with the 4.5% interest rate. The escrow is what, $10 difference, not a huge deal there. But again, I'm paying now $63 more per month. And look, this was a smaller, relatively cheaper property. It was a rental property. So remember, when you're getting a rental property rate to begin with, that's going to be different than the rate you're going to get for your own home. You're going to have to pay a little more to get that rental property rate. So 4.5%, that was fine back in 2018 when I got it. But man, 6.5%, that does make a big difference. And when you start to look at the numbers of how much less you're paying down in terms of equity, how much more you're paying in interest, and the fact that your monthly payment jumped up to start $63, you can see why a lot of people are wanting to figure out how to pay this down. And then look, imagine if this is your own home and maybe a more expensive home, and all of a sudden you're paying $100, $150, $200, whatever it is more per month for your payment, and you're paying less down in terms of equity, and you're watching the fact that your interest is going up and up and up. So another thing, by the way, just because we are talking about interest rates, so I had a line of credit, I still have a line of credit on our home, on the equity in our home, and that line of credit, which I started 3-4 years ago, started at, I believe, 4.5%. And that line of credit, the interest rate, so you renewed it every year. And every year we renewed around November or so, and I'm renewing it right now. But that line of credit never went up. It never went up. I think I started it again in maybe 2019. I can't remember exactly, but for the first 1, 2, 3 years, that line of credit never increased. And then because you've seen interest rates just go through the roof this past year, you've had several rate hikes where, I can't remember exactly in terms of how it affected my interest rate for the line of credit, but I believe it started at 4.5 and went to, I think it was 5.25 and then 6 and either 6.5 or 6.75. But anyway, and I could look this all up, but it's something around there. So now the interest rate to renew is 7.5%. So that interest rate for the line of credit went from 4.5, 3-4 years ago when I got it, to now 7.5%. Hopefully that goes down in 2023. But when you talk about your ability to borrow money, let's say you're trying to do what I'm doing and get in the rental property business, big difference between your return on investment and your cap rate and what makes sense in terms of a 4.5% interest rate and a 7.5 interest rate. And I'll be honest with you. So we bought a decent amount of properties, rental properties, 2018, 2019 into 2020. But then when the prices started to skyrocket and I thought, this is going to be the top of the market, which now looking back, you wish you'd have bought some more in 2020, maybe even 2021, because the prices continued to go up. But now with the market being so high for all these properties, and it's cooled a little bit, but it's still pretty close to the peak, I would think, for most of these properties. That's what I've seen, at least in the rental property market. I think we were able to sell some this year at essentially dang near close to the peak. And properties are still going for around that, maybe a little bit less than that. But you just look, unless you're a big time institutional investor or you have a ton of cash right now and you can buy these properties for cash, which a lot of these funds are doing also, they're kind of pricing out the little guy out of the market. But does it make a ton of sense right now to buy an investment property if you're going to get a 6.5% interest rate, or your line of credit to borrow is 7.5%? It's a lot tougher to make your money on 7.5%, obviously, than 4.5%. But look, quick video here. I just thought it'd be interesting to show you the numbers of when your interest rate increases. What does that actually mean for somebody's interest rate? So I wanted to show you mine just because I'd got this beautiful letter in the mail recently, and I could actually do the math on what that meant in terms of how it was going to affect me financially. There you go. If you like this video, give us a like, comment. What do you think about interest rates, the rental property business, real estate? What do you think is going to happen in 2023? If you haven't subscribed to this channel, I know this channel has been kind of weird. It started out as a hockey channel that didn't really work out. So we've shifted to some history videos, to some real estate videos here. Whatever works, whatever you guys watch the most, we're probably going to focus on this channel here. So once again, please comment, like, subscribe. Let me know, what are you thinking about interest rates? What are you thinking about real estate, the rental property business? Any questions you have for me, all that. And once again, Merry Christmas, Happy Hanukkah, Happy Kwanzaa, Happy New Year's, Happy Holidays, all that. Have a great time with your family and your stockings and all that for the kids, ready to rock and roll. 'Tis the season. It's the most wonderful time of year. See you guys.